When we look at Warren Buffett's stock moves in 2020, something glaringly obvious pops out. Buffett has got rid of a lot of his stocks, and with his investing firm Berkshire Hathaway, he sold over 19 out of his 69 stocks in the first quarter of 2020 alone. This now leaves him with 50 stocks left in his portfolio. One major question must be asked. Why did Buffett behave in a completely different way to which he normally would? Normally, Buffett is by far a net buyer of stocks every single year. Why is 2020 different? The first thing we need to talk about is the underlying economy. There is a stark difference between the economy of 2019 and the economy of 2020. Let me explain. I don't know if you guys remember the headlines of 2019, but it was all about the strong economy. It was the longest bull market in history, jobs had grown for 106 consecutive months, the unemployment rate was low at 4%. By most measures, the economy was firing. It was kind of like Trump's claim to fame. Certainly if you looked at his Twitter accounts, he was not afraid to talk about the economy. But now, fast forward to 2020, a crisis occurred that no one could have predicted. A virus swept throughout the world, causing countries to go on lockdown, businesses to shut, and people could no longer work. And I'll give you two guesses on what this did to the economy. Yep, you guessed it. The economy basically halted in its tracks. First quarter of 2020, instead of growing like it normally does, it shrunk by 4.8%. But what's even more startling than this is experts predict the second quarter of 2020 to be a lot worse. They're predicting around a 30% decrease in GDP when the true effects of the virus and lockdown starts to sink in. So if you think about it, in 2019 when Warren Buffett was buying a lot of stocks, it was a totally different ballgame because the economy was on fire then. And when the economy is going well, what does this mean? It means businesses are producing a lot of output and therefore making a lot of money. And at the end of the day, this is exactly what us investors look for in a business. How much money are you making? 2019, the answer to this question was we're on fire, we're producing a lot, and earnings are high. But 2020, it's a totally different story with regards to output and profits. This is a key reason why Buffett's stock moves have been totally different to last year. The economy just isn't the same. But this does leave one bulging question which comes at us. Hang on, isn't Buffett's strategy to buy when everyone is panicking? Aren't some of his most famous words to be greedy when others are fearful and fearful when others are greedy? Surely this means Buffett will be buying a lot of stocks during these times. Not so soon. There is something else I need to show you. You see, the reason why Buffett likes to buy when everyone is fearful is because normally stock prices are down big during these times. However, the interesting thing that has been happening is that stock prices have been going up. Over the past 2 months, stocks are up over 35%. It would appear that investors are not fearful in the least. In fact, they're bullish. Overall, after all of this has happened, stocks are only 10% down from their all-time highs. So we're in this weird phenomena where the economy has been getting absolutely destroyed, yet the stock market is up. We're not seeing the cheap prices in which we normally would when the economy takes a downturn. Now, because Buffett is basically the epitome of value investing and waiting for good deals, his company, Berkshire Hathaway, is staying on the sideline and has in fact sold a lot of stocks. But this isn't the only reason why he's behaving so differently in the stock market. This is just the recent events that have happened. It's kind of like the cracks in the iceberg. But what we can't ignore is the fact that the iceberg was already unstable in the first place. The stock market was already nearing the end of its cycle, whether this black swan virus occurred or not. Let me clarify this. The first thing that I need to explain is market cycles. Those who have studied the history of stock market cycles will know that the market tends to crash around every 8 to 10 years. Now, the last stock market crash that we saw was obviously the housing one in 2008. That's 12 years ago. This is a sign that we may be due for a market crash if we go by what history tells us. The next fundamental reason which shows us that the market is perhaps in an unstable situation is the Buffett indicator. And this is the indicator that Buffett uses to see how the market is priced. Back in 2001, he remarked in a Fortune magazine interview that it is probably the best single measure of where valuations stand at any given moment. So, this is what the Buffett indicator currently looks like. It's sitting at 156%. Now, let me give you some context to that. The average for this indicator is 75%. Generally speaking, most believe that anything over 100% is considered overvalued. Right now, it is well above that 100% mark. The last time it was near this height was around the technology bubble crash in 2000. This may be a sign that prices are too high. The other thing is that the denominator of this graph, GDP, is expected to fall in the next quarter of 2020. So this could potentially make things worse. And you know, Buffett's right-hand man at Berkshire Hathaway, he's definitely someone who looks at data such as this. I'm talking about Charlie Munger, of course. He said this recently. I would say basically we're like the captain of a ship when the worst typhoon that's ever happened comes. We just want to get through the typhoon and we'd rather come out of it with a whole lot of liquidity. We're not playing, oh goody goody, everything's going to hell, let's plunge 100% of the reserves into buying businesses. Now basically what he's saying is Berkshire Hathaway, Buffett's company, is playing the game safe. They've got a lot of cash on their hands, but instead of putting that all into stocks, which a lot of investors are doing, they're behaving prudently. They're making sure they've got enough cash reserves for if things get worse. And you know, at the end of the day, prudence is so important in these market times, especially when you look at Berkshire Hathaway's income statement. As you can see, in the first quarter of 2020, they lost the most amount of money that they've ever lost in their whole history as a company. They had negative earnings of $49.75 billion. And this was obviously caused by the lockdown. A lot of Berkshire's businesses just weren't allowed to operate. People weren't allowed to go to them, but employees still had to get paid, expenses were still there, and this obviously results in making a loss. Another reason why it's so important for Buffett to be prudent with his cash pile. So I guess the last logical question that we should all ask ourselves is, should we be playing the game the same as Buffett? My answer to this question is yes and no. I think it is wise to always follow Buffett to a certain extent. You know, we can look at Buffett's cash position and be prudent as well, hold a bit of cash ourselves in case the market does crash. But do we need to be holding as much cash as Buffett? Probably not. He has to hold a lot of cash for his insurance business in case claims get called. He needs a lot of cash if a big company wants him to buy them out. We, as individual small investors, we don't have these types of responsibilities, and therefore we shouldn't entirely copy what Warren Buffett does. But we should always take from Buffett's knowledge what we can apply to our own individual portfolios. The key message that I'm really getting from Buffett is to be prudent and patient. After listening to what Buffett has had to say in 2020, it seems that he doesn't know for sure what is going to happen next. This is why he's playing the game very cautiously, kind of like a lion waiting in the bushes, just waiting for some juicy prey to come along. Not rushing, not hunting, just patience. Buffett knows that the stocks that he owns are quality. He knows that the stocks that he could buy on the market have a hefty price tag attached to them. He knows that the economy at the moment is on shaky ground. And this is why we're seeing such cautious behavior from Warren Buffett, waiting and hoping that the tide will turn around, stocks will get cheaper again, and then he'll pounce. Then he will start buying once more.